First off, we are all up, living, walking, and we were able to come here today and fellowship, meet people, and have some good food. So let's give some appreciation for those of you who are online with us and those of you who are here in the audience. Give up some love. Thank you for coming. I will tell you that nothing of significance can ever be done alone. I want to thank also not only all of you who are behind the scenes, who shared and got the word out, and those of you who showed up, but also I want to thank the volunteers, AE Media Group. I want to thank Mary Cooksey for the food, all of our volunteers that are here. And then also, we have a bank that is a new relationship, Independent Financial, and they'll be able to introduce themselves to you, but I want to give them some appreciation for making this night possible. So thank you for all of the people who've come together to put this event on today. So thank you. Give us some love for them. And then briefly, what I want to do is I need to ask for your help. And so I don't know if you're like this, if you're one of those people who always help people. And then when it comes to people helping you, you're like, it's hard for you to accept. Are you like that? Okay, well, I'm going to be real with you. I need some help, right? So I'm going to tell you what I need help with. First off, have you ever had an idea that was really bigger than you? That it was so big, there was no way that you could ever bring that idea to fruition without other people being involved in that. So I'm going to talk to you about this idea, and let's just call it the Empower series. So the idea is anything that we envision, we can achieve. All things are really possible because we have all of the resources around us with individuals, with companies. There's resources that are underutilized that are around us. And if we just tap into them, if we open up, if we look at the people who are in this room, the people who are on the podcast, you look at the Empower series, there is an illusion of lack. There's an abundance of resources that can help us take that next step to manifest this idea, this dream that we have. So that's the Empower series. We've been doing the Empower series since 2011. And again, like I said before, it's not alone. There's a number of partnerships and organizations and people that have come and gone that have helped the Empower series survive for over 13 years. But here's where I need your help. Number one, people are not going to find out about the Empower series unless you share it with them. So I want everybody who's here, I know you're like finishing up your plates right now because we have some good food, y'all. Y'all missed it. But if you can take the time and pull out your phones and let people know where you are, I really need you to let people know where you are now and what you're about to do. You should have all received a link with the live stream link. I would say share that with somebody else that's special. Some of you have invited people here and brought people. That's great. But if you can please share this with somebody else. That's number one. Number two, now that you're here, I really want you to get what you're supposed to get from the Empower series. There are no accidents. I would say a lot of people knew about this today, but not everybody's here, but you are here. And so you're here for a purpose. You're going to get some information, get some ideas that if you act on can help you take that next step to achieve your goal. And in this regard, it's about being prepared to purchase a home. So that's two. So get what you're supposed to get, share it with somebody else. And today is September 19th. For those of you who are here in Texas, you might know about things. Giving Day, right? North Texas Giving Day. There you go. North Texas Giving Day. So this is the 19th. This is the day where if you have a nonprofit that you're passionate about, it's an opportunity for you to help that nonprofit increase their awareness and their impact and also make donations. So if you're listening to this right now, if there's a nonprofit that you're feeling, share that nonprofit with somebody else, because the only way we can really make a greater impact is if you share it with somebody else. So we, the Empower series, have a profile on northtexasgivingday.org. If we are that nonprofit, please share us. If you so inclined to give a donation, we're more than welcome to accept that. But I really need help because this idea that I have is an idea that's not just in Dallas, it's a global idea. And there's a lot of things that are going viral, a lot of negative things going viral. But this is positive. This can impact the world positively because our mission is to positively impact the world by inspiring everybody to thrive in every area of their life. Because the principles to be successful are transferable. And right now, we're going to talk about the area of how do you prepare yourself to buy a home. I don't know if you heard, but yesterday the Feds just reduced interest rates by 0.5 percentage point. So trickling down, that's going to affect mortgages. So if you are thinking about buying a home, that was a dream of yours, now's the time to get prepared. And we've got experts here to talk to you about that. I bought a home. My second home I bought was in 2017. I'll tell you that story later on the podcast. But my real estate agent was Charmaine Byers, and she is here with us today. I'm going to introduce her, and she's going to introduce you to our other guests and experts on the panel. But she is someone that was introduced to me. She was a blessing. She was one of those resources that was underutilized, and she really made the process of me purchasing my second home here in Dallas very smooth. So without any further ado, with me getting out of the way, I want to go ahead and introduce you to my real estate agent and show some love, Charmaine Byers.
Thank you, Clifton. Thank you so much. Thank you. It was a blessing meeting Clifton because we had no idea of what this relationship would actually turn into. And then when he shared the Empower series with me, I was like, oh my goodness, how can I be a part? What do you need me to do? And we've done several events together and just helping to bring the word out about home ownership. That's what I'm passionate about. And I also have 3 lovely young ladies who are just as passionate about home ownership, legacy building, wealth building as I am. So I want to introduce first Angela. Angela Jones is with Independent Financial. Would you like to say anything?
Good evening, everyone, and thank you for coming out. As she said, I am Angela Jones. I am a community mortgage lender, which means I specialize in lending in low and moderate communities to low and moderate income earners and to majority minority census tracts. So I help remove some of the barriers that we may encounter as future home buyers. So I can finance any type of property, but that is my specialty.
Love it. Love it. And Angela and I have had the pleasure of knowing each other in and out of the industry for several years?
At least 10.
At least 10 years. And she has been one of the ones that I've seen be very consistent in who she is, the information that she provides. And she is an expert. So I can't wait to dig into the programs and things that you guys have available.
Looking forward to it.
All right. Excuse me. I'm going to skip over to Ms. Larche. She is also with Independent Financial.
Well, thank you, everyone. I echo Angela's sentiments. I am the Senior Community Development Officer for Independent Financial. I cover the North Texas region and work very closely with Angela with building relationships with organizations in the community and really closing some of those barriers that hold our communities back. So just grateful to be here.
I love it. Now, I haven't had the pleasure of spending any time with Larche, so I'm excited to get to know you this evening. The next person we have is Miss Title Tina. She is who I call my kindred sister. Literally, when we laid eyes on each other at an event, we just knew that we were going to be a part of each other's lives and that we were going to do great things together. So any opportunity that I have to bring her with me, to bring her alongside of me, to share her big, vivacious, creative mind of hers, I love it. So she is here with Experience Title. So she's going to share with us information about title and title insurance and how important that is throughout the home buying process or the home ownership process. Okay? All right. Would you like, yes.
Yes, you guys, I am Title Tina. I am one of the founders and partners of Red One Law Firm Experience Title. And with us, closing isn't something you do, it's something that you experience. We're very well-versed when it comes to title issues, especially when they're dealing with probate.
Perfect. Hold on to that. So, Clifton, thank you so much for your vision. You want to let her hold on to it?
I want to say something.
Okay, sure.
So for those of you who are watching online, any handouts that you're going to go through are underneath the video in the description section. And if you have any questions, like the audience can ask questions, but if they have any questions, I'll be looking at the live chat and I'll be speaking on their behalf.
Perfect. Thank you. All right. Well, let's jump into it. So today we are here to talk about home ownership. And we want to just kind of go through the process a little bit. Before we get into that, let me just introduce myself. My name is Charmaine Byers, and I am with Coldwell Banker Apex Realtors. I've had the pleasure of being with Apex for 10 years now. November will be 10 years in the real estate industry as a sales professional, as a real estate agent. So I've had the pleasure of serving in a position to serve other agents so that they can become better agents for our community. I recently sat for my broker license, and now I am a licensed broker associate with Coldwell Banker Apex Realtors. Thank you, thank you, thank you. That's so that you know the difference. There's just a little bit more education and requirement that goes along with having a broker license. And for me, it was important for me to get that because it's important for me to show you as a community how invested I am in your future by going the extra mile to get that additional education. Okay. So, love what I do. Very passionate about helping people to build a legacy. And we understand that building a legacy really and truly comes through home ownership, right? Wouldn't you guys agree?
Absolutely.
So that comes through building, wealth through real estate. And the way that we do that is to make sure that our community, our family and friends are completely and totally educated. So I want to just go through and we're going to talk a little bit about the home buying steps. Okay, let's get into it. Does anybody have any questions before we get into it? Any questions? Any questions online, Clifton?
Not yet.
Okay, so first of all, you have to make a decision that you are going to get out of the rent race. Right? That's the first step, is to understand that, you know what, I want to transition into home ownership. And the way that you do that is you connect with a realtor, and not just any realtor. They need to be educated. You need to be asking them questions. The first question I would ask a realtor is, are you a full-time realtor? Are you doing this as a hobby? We do have a lot of realtors who do it on a part-time basis. And that's not to say that they're no good, but that's to say that they may not be giving you 100% of what you need as a consumer because they're not obligated to because they're working part-time. Okay. Once you have connected with the realtor, the first step is going to be to evaluate your needs. Let's determine what it is that you actually need. Do you need a 2-bedroom? Do you need a 3-bedroom? Do you need a yard? Do you have pets? So we're going to go through a needs assessment. And part of what I do in that needs assessment is I evaluate what is it that you need, or do you have money for down payment? No? Okay, then I'm going to put you with a partner like Independent Financial that can help you with down payment, because sometimes that is the biggest barrier is down payment. We don't have enough. Go ahead. Do you want to say something?
Well, that is absolutely one of the barriers that we work very hard to help alleviate, either with special programs, and many times we can connect with down payment assistance programs that will assist and maybe boost up the amount for which they qualify, pay the closing costs, and the like. So that is huge, getting to remove the barrier of the funds needed to close.
Yes. And so some people will say, okay, let's connect with a lender first. And the reason why I say connect with a realtor, because a realtor is going to put you in contact with the right lender. Not all lenders are created equal. Not all lenders provide the programs that are needed. And so that's why when we have that needs assessment, we understand clearly what it is that's needed. And then we can put them right in touch with Angela and Larshay so that they can get exactly what they need. Sometimes if you put people with the wrong partners, what will happen is they will get discouraged.
Absolutely.
They'll get discouraged. So you need to really put people with the people that are going to definitely help them to get to the finish line, right?
Absolutely.
Any questions on that? You guys stop me in between, okay? This is a really open conversation. We want it to be casual. We want you guys to leave here feeling empowered to make decisions on your home ownership journey. The next step, yes.
I thought it varies from the price of the home. What is the pretty much posted going price for down payment?
So,
Repeat your question so they don't have a mic.
okay, very good. So her question was, what is the going rate for down payment? And that's going to potentially really depend on the amount of house that a person is qualified to purchase. Angela or Lachey, would you guys like to tap in there?
I can chime in on that. So the down payment that is required is the difference between the amount that you can borrow and the amount that they're selling it for. So that gap in between is what is your down payment. And many programs, it's going to be a percentage of the purchase price. For instance, if let's say there were a $100,000 house for, just for in our mind math. And if you're going with some types of loans, you would need 3.5% as down payment.
Yeah.
Or 5% if it's conventional minimum. But the old wives' tale is that you needed 20% to make for down payment in order to purchase a home, and that's just not true anymore.
Yes.
So I'll get into a little bit more of that and how to how to close that 3.5% or 5%, 10%, 20% gap with one of the products that I offer is 100% financing. So the purchase price and the loan amount are one and the same. So in that case, there would be no down payment, but most programs do require something as down payment.
Very good.
And I may have missed this, but speak about the city, state, and county. You mentioned that they have assistance programs for down payment?
Not yet?
Yes.
Okay, let's talk about that. You'll go into more detail later.
Yes.
Sure. Okay. There are down payment assistance programs through many cities offer. There are, some nationwide programs like Chinoa that offer down payment assistance. There are statewide programs, and all of them have criterion that for which you must qualify. Typically, as a first-time home buyer, you can't be over a certain income threshold per household, per the number of persons in your household. And that's going to vary from city to city. There will be other criterion, such as there's a max on the purchase price, the max on the amount of monies that you can have. And that's why going to the right lender is so important, because there's a lot of if-thens that's included in that process, that you need the right lender vet to make sure you get the right lender who has the information, who can put you with the best programs that's going to help you the most.
That's excellent.
Would it be wise to like a personal check, or do they still, I'm not old fashioned, so would it still require like a cashier's check? Or are we just doing it all computerized now?
Okay. So let me repeat her question.
Okay.
So her question is, are we for the closing costs, are we still required to provide a cashier's check, or is everything computerized?
So yes and yes. So I see. I'm glad to see you've jumped all the way to the end of the process. Vision. You are at Title Tina's office. So the funds that are required to close will come from a couple of places. So your lender will provide the amount of loan that you're getting. If there is down payment assistance, those funds will be there. Any monies that you've already paid, which we'll get into the process of how we've gotten to Title Tina's office.
Yes.
But those funds can be brought in the form of a cashier's check. You can also send a wire, so you can send it electronically as well.
Yes.
No personal checks, though.
No personal checks and no money orders. So it has
And
to
no
be
money
a
orders.
guaranteed fund. Guaranteed funds. Great question.
I love it.
Keep them coming, guys.
She's at the closing table.
We kind of talked a little bit about proof of funds and pre-qualification, but let's jump into it a little bit more. So let's talk about what that process looks like. Now that they've connected with a realtor, we've established what their needs are. Let's talk about now that we've connected them with independent financial, where are we going from here?
Great. So they come to me. First of all, I'm going to call the realtor and thank them for sending the client to me as a referral. And we start with a great 15, 20-minute conversation to find out all about their finances. You would treat your lender like your doctor. You tell them everything.
Right.
So that I can best navigate what programs are going to work for you and what won't work. So we won't be barking up the wrong tree and then know that, oh, there's something in the background that we've missed.
Yeah.
So we go through the income, the living situation, how much rent and how much debt. What has happened in the past is, are there credit issues that we need to navigate through, that we need to work our way through before we get to the closing table? So that's all in conversation. We put it all on paper and then we start with the application. We can do it over the phone. It can be done electronically. And then we upload the documents. We get documents from you that's going to include proof of income. So if you're working a job, we need check stubs and W-2s. An ID, we need proof of funds. What funds do you have saved? Will or won't you be using those funds for closing? So just because you have funds, if you qualify for down payment assistance, you may not even necessarily need to exhaust your funds. So that's my goal, to not have you exhaust your funds. We go through all that. We submit your completed application and all of the documents to an underwriter once you're under contract. But the first thing that I do is I run it through the underwriting engine, find out the amount that you qualify for, tweak all of the details to make sure that I have everything exactly right. And then I present to you and to your realtor, this is the amount for which you qualify and what program. And so now you take that letter, hand it to your realtor, and you're off to find that beautiful home.
Absolutely. And that's my favorite part, guys. So we will not start looking for a home until we have that pre-approval. My job as a realtor is to mitigate risk, to mitigate stress. And the way that I do that is by doing things decently and in order. So we can get so excited. We want to go and look. I don't look at houses for a hobby, y'all. That's a job, right? So with that being said, we're going to make sure that you are, when you go to look at the home, you actually qualify for the home that we're looking for. Because there's nothing worse than looking at $1 million home when you only qualify for $500,000.
Qualifying for a house and affording.
That's a real question, okay? So the question was, what is the difference between qualifying for a home and being able to afford a home, right? So typically what Angela and Larshay will look at is, are you able to, is it a third of their income, right? 3 times. Roughly.
Yes, roughly 35% of your gross verifiable income. So the amount that I verify may not include all of the income in the household.
Yes.
But the amount that I can verify according to guideline, 35% of that, we don't want to use more than that amount to purchase a home for your monthly mortgage payment. And that's because we don't know all the ins and outs of your life that we don't consider. We don't consider the kids are in dance, that you've got private school lessons and the things. And those are things that as an educated buyer, and that's in our discovery conversation.
Right.
Just because I say that you can afford a $500,000 home doesn't mean that you are comfortable making that mortgage payment.
Absolutely.
And I want to
go ahead.
Just echo, I think that goes back to the education part, right? Where we collaborate and do that home buyer education. Because just as Angela alluded to, at the bank, we're looking at growth, right?
Right.
Yes.
Growth is pre-deductions, right?
Right.
So as we know, that is not what's actually deposited into our account. So the bank, we're going to say this is what you're eligible for based on that pre-tax income, but you actually know what you have coming in. And as Angela mentioned, all of those other essentials that you pay for every month. So it's important. We tell the buyers, we're qualifying you for this loan based on gross,
Right.
but you know what's actually coming in. Does that make sense for you when you do that comparison?
Absolutely. Absolutely.
Question online. So Ella is asking, does having another home go against your debt to income ratio? And the home has a mortgage, but it's being rented out.
Okay. So the question was, having a second home, does that go against your debt to income ratio when it's being rented out? Angela or Larshay, I'll let you guys, either one of you take that.
I'll take it. Okay. So having a second home and a rented home is considered an investment home, two different things.
Mm-hmm.
If the home is leased and you have a signed lease and you have verified that you are receiving the rents for that, and you've done it for a period of time, that goes against, we put those two against the mortgage payment. So we'll use 75% of the rent received in order to cover the mortgage payment. Whatever is left over goes into your debt ratio. And the reason that we use 75% is because we have to leave space for occupancy, for repairs, for things that the expenses that you'll have because you're still the owner.
Right. Right. That's a good question. Yes.
And I want to make sure I understand what you said. You said that once you go to the lender and they're going to give you a pre-approval letter,
Mm-hmm.
and then you out looking for your home.
Yes.
Okay, well, is a pre-approval to me doesn't mean approved. Difference between pre-approved and approved.
Okay. So her question was, what is the difference between pre-approved and approved, or pre-qualified and approved?
Mm-hmm.
Ladies?
I'll let you take that.
Okay. So the difference is we pre-approve you as the buyer. I have vetted your income, your debt, any judgments are cleared and all of that. I have no idea what the house looks like. I don't know if it appraises out. I don't know, all the particulars of the exact amount of the taxes. We, in my discovery conversation, we'll ask, where do you want to live? Because tax rates are different, which have an impact on the mortgage amount.
That's right.
So I will try and qualify at the highest amount. If you say you're looking in Frisco and McKinney and Duncanville, complete different tax structures.
Right.
So we will pre-qualify you that you qualify for a certain amount of a payment. And then that payment translate in the area that you want to purchase to X amount of home. So your pre-approval letter will actually have an amount of a purchase price, but we've had a conversation that there's a lot of if-thens in there. If your taxes are higher, if there's an HOA, if you choose a townhome that has a $400 a month HOA, that goes into that payment. And yes.
I was like, don't get too excited.
Don't get too excited.
Well, as pre-approved, that means that you've passed.
Yes.
We just need the home to fit the puzzle.
And I know you mentioned that the federal has lowered, what would you say?
The interest rates have been lowered by 0.5%. Mm-hmm.
Taxes are a big thing here now.
Yeah, taxes and insurance. Like there's a lot of variables, right? A lot of things to consider. So I really like how she said, don't get too excited. It's one thing to be excited about the home buying process, but you got to be serious enough to be and willing enough to look at the whole thing, because our goal is we want to get you into a home to build a legacy and not into a home to be out of it the next year because you can't afford it.
Absolutely.
Right? So we're going to properly make sure that you are properly educated and understand all of the ramifications, all of the risk for everything. Okay? Any other questions? Keep them coming, y'all. It's good.
I know that you alluded to interest rate drops at the very beginning, and you just mentioned interest rate drops. Angela and I, we do a lot of education, right, in different topics. Oftentimes as consumers, we try to avoid some of the news, right? Some of the things that are happening in the world. But I tell people all the time, know what's happening in the economy.
For
know
sure.
when the Federal Reserve meets. What does that mean? When are they going to meet again? Are interest rates possibly going to lower in the future? Sometimes we're just kind of beelined and focused on the now, but it's really important, I say, to be in touch with what's going on, because inadvertently it does affect us as consumers.
It does.
So that was really great that the rates did drop, but also see what they're forecasting coming up again, right? They're going to meet again. Is it going to drop again? Does that mean I need to be cognizant of when I purchase or get the process started now talking to a lender, because that can impact me in the future. So I
That's
definitely,
There's a question. It's interesting that you brought that up, because Jeannie asked, do you think interest rates will go down anymore?
Yes.
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 So hold on before you.
To that, but it's really interesting because nobody has a crystal ball. So that's the
That's one.
Okay, so the question is, will interest rates go down anymore?
I heard you. Do you want to take?
Well,
Because I heard you.
I watched the financial forecast.
Yes.
So I
I'm
do.
gonna go ahead.
So yes, my answer.
Oh, you're
Oh,
right.
you're mine.
I watched the financial forecast because I watched the stock market. Yes, they will be going down some more. That's my forecast.
Politics is political, as we know, we're going through an election now.
Yes.
And Vice President Kamala Harris is, she's not promising, but she's considering helping homeowners first time homeowners. I believe she said $25,000 help with the down payment. Would that really be any help for a first time buyer with $25,000 that she's proposing?
Okay.
Gonna let
So her question is, and I'll come to you guys just a second. Her question is, with the political climate that we are currently in, how will what they're talking about, like the $25,000 to help homeowners purchase homes, how will that affect them? Is that a good thing? Will it actually help them to get into a home?
Short answer, yes. Yes. It will definitely help. So that is one of the down payment assistance programs that if there is additional monies out there as a community lender, it is my job to find everything for which you qualify. And it could be the difference in you coming to the table with zero money or coming to the table with an additional $10,000 or $12,000. You definitely, so I don't know the details of the program yet until they're
It's
out.
been released.
But I do believe that it is geared towards first-time home buyers, primary residence, first-time home buyer. Any other criteria that's going to be a requirement won't be unfold until it's available, till it becomes available.
And I know that you alluded to the platform that Vice President Harris is running on now, but a lot of consumers don't know that there are already federal dollars out there.
Yes,
absolutely.
Through the Federal Home Loan Bank. Now it is a first come, first serve, and those funds they were exhausted very quickly.
Very quickly.
This year. But we are member banks of the Federal Home Loan Bank. And so that's what we do. We look for those opportunities to be able to help Angela closing that gap by offering those homeowners, $20,000, $10,000, whatever that may be, and then seeing how we can stack it. I will tell you, as everyone has praised Angela, this is her passion. She really goes to bat to make sure that we can get individuals in homes. And if we can stack things, if we can, work some things out to where that helps you get into the home, she will take as long as it needs to be to make sure we can get all those resources. So again, it really means working with your realtor, finding the right lender who has access to these programs, our member banks where these programs are available and accessible, so that again, it benefits you as a consumer.
And then I'd just like to add, not only having access to it, to the programs that are available out there, but experience and knowing how to couple and stack.
Yep.
Not everybody has that skill set.
Yeah.
Okay. And that skill set comes with experience.
Yeah.
Question here, and then we'll go online.
Can you explain stacking
What does that mean? Stacking programs.
Okay. The question was, can you explain stacking and stacking programs? What does that mean?
I'll take that one.
Yes, you saw me looking.
So stacking programs means that if you qualify for 2 or 3 down payment assistance programs and the program itself will allow it, you may get all of the programs. For instance, I recently, less than a month ago, one of my buyers came to the closing table. I think she got a check back. She got 2 checks back, actually, but she had a total of about $63,000 in down payment assistance. And that's not all from one program. So that is, again, pick a lender that not just knows the programs, but is willing to work. Yes, it's going to be a little more paperwork. It may take a few more days, but I'd say, being able to get everything for which you qualify outweighs getting there quickly.
Absolutely. Let us take this question online and I'll be right back to you.
So Ella is asking, her homeowner's insurance went up and a lot, over $1,500 since purchasing a home. Is there a way to stipulate in the buyer's contract to hedge this for purchasers?
So I'm going to just say that insurance. Okay, so Miss Ella's question was, her insurance went up significantly since she purchased her home. Is there a way in the buyer's contract to hedge whether insurance goes up or not? And I'm going to tell you, unfortunately, no. That is the short answer. And I'm going to go a little bit further to explain that the state of Texas has had a large number of catastrophes. And with that being said, there are insurance companies who are literally having to leave the state of Texas because they can no longer conduct business here. They won't make money. So they are leaving the state of Texas. So with that, you can guarantee that not only homeowners insurance, but insurance across the board is going to increase. Would you guys like to add anything to that?
Absolutely.
No, go ahead.
Absolutely. So one of the considerations as a mortgage lender that I take into account is the cost of insurance. And what I do, because I have great partners that I can pick up the phone, if a buyer calls me and there may be a property that may be just outside of the amount that I've given as a pre-qualification, or maybe it's right at the line, I'm going to pick up the phone and call a few of my insurance agent friends and have them to quote that house.
Yeah.
So I can know, not that they have to get the insurance from me or from, but I need to know that there is affordable insurance that's going to fit in that payment. So remember, you qualify for a specific payment.
Yeah.
If the home is not insurable at a reasonable rate, it doesn't matter what the purchase price is, you can't purchase the home.
Yeah.
So,
And Angela, I'm so sorry. Can you explain, and I know we may be jumping because you're talking about that mortgage and how PITI, kind of what encompasses that mortgage so they kind of understand that breakdown?
Yeah, let's talk about it now. Let's get into it.
Let's get into it. So the amount for which you qualify will include your principal and interest of the mortgage that you qualify for. So that is the repayment. You're going to repay the lender the amount that you borrowed, right? You're going to pay the property taxes as assessed by the city and any MUD districts or any taxes that are assessed by that property divided by 12. We put that in the payment. And then your homeowner's insurance. What is the cost of the homeowners? What does it cost to insure that property? We take that annual amount, divide that by 12. And that's what determines the amount of the payment. Now, on many programs, we add to that your mortgage insurance. So many conventional and FHA programs, if you have a down payment of less than 20%, there is an additional insurance that you pay. And that insurance amount covers the lender. So it's just statistically borrowers with less than 20% down payment are a higher risk. So it's a risk insurance to insure the lender. So again, your mortgage payment will include the principal and interest, your taxes on the property, the insurance on the property, and any mortgage insurance for the program. Now, another item that's taken into consideration, and I alluded to it when I answered your question, is if there is an HOA.
Yeah.
If you have a homeowners association, you don't make that payment to the lender, but we have to consider it.
Yeah.
So that is also added into the amount for which you qualify.
Yeah. And that's going to be a part of the pre-qualification, pre-approval, and all of that. So, question here.
Yes, that's a two-part question. What is your advice for acquiring property for investment purposes? And then part two question is, are there any programs out there for investment
For investors.
purchase properties?
Okay, let me repeat the question. He says, what is the requirement for purchasing an investment property? And then the second part of his question is, are there any programs available for investors?
Me again, huh?
Yeah.
Thank you, Angela.
So an investment property is different in that no one really helps you. There's no down payment assistance. There are no grants to help you to purchase and acquire the investment portfolio. You will typically have a down payment with really great credit, a good strong profile, maybe a 10%. But typically you can count on about 20%, 15 to 20% down payment. And then the next part of that question you ask are there any programs? Is something called I need to think, what does the DSCR stand for? But it is it is a way in which you can purchase investment property that you can use the future rent as income. As income. So it's not just, you don't have to fit all that into your debt ratio of your primary residence and car and other loans. If there is enough rent that is projected for the property, and this works really well with multifamily, on a 2, 3, 4-plex. If whatever the rents are estimated by the appraiser, or if the property is already rented and you have a history of being a landlord, that can be counted as income and help you in your debt ratio. But as far as grants or down payment assistance, I'm sorry.
But can I speak on that?
Yeah.
Please.
Yes.
But there are, it depends on what type of investing you want to do and what type of investments you're buying. Because there are programs out there where you can go and do like hard money loans.
Yeah.
And depending on how they structure it, you will come to the table with nothing out of your pocket if you get with the right lender and your paperwork is actually done correctly.
And that's a hard money lender.
It's hard money, so you better know. Yeah, not a bank.
Not a bank.
Not a bank. So
Yeah.
it's
Yeah.
not a bank. It's a hard money lender. The rates are higher. The terms are a little bit different. But it's a way, take it away from you. Go through Angela if you can. but I just want to just answer your question because it is Empower. You want knowledge out there.
Absolutely.
So I just wanted to just share that with you, that there are avenues for you to go if you can't fit into a traditional banking criteria. You want to go into investing. There are other avenues that are available.
Correct.
And we always suggest as a bank with those hard money lenders, shop around and then know what those terms are, because sometimes there are, you probably may know, strict to the point terms.
Yes.
If you don't meet those, then it inadvertently can harm you. So, yeah.
And I would also add, if you do acquire the property as a hard money and then you choose to keep the loan, you can always refinance it into a regular bank loan.
Yeah.
Once you've done the repairs or whatever needed to happen, or you've held it for a period of time, there is a way. You don't have to stay with the hard money lender.
Right.
No, and that's what a lot of investors do. And that's the perfect thing to do. It's just a way to get in the door.
Yeah. And so all great conversations, right? With the hard money loan. So again, with the hard money lending, those terms are going to be shorter. So you're going to look at 6 months, maybe up to 12 months, but no more than that. Okay. So one thing that I would also like to share, if you own a home, why not pull out equity that you have in your home to purchase your next investment?
That's great.
So that start thinking in that manner.
Yes.
Because you are the bank. when you are an owner, you have access to equity in your home to be able to pull out, put a down payment on something that you want to invest in. And to me, that's the best route to go. Yes.
Absolutely. And that's what the whole series is about, right? It's empowering you. So once you are a homeowner, you're actually building wealth and what you do with that wealth. So first step is you need to own your first home.
Yes.
Own your primary residence, not focusing too hard on where the interest rates are. I always say, date the rate, marry the home, because we can always refinance to a lower interest rate, but you won't get to take advantage of that equity and start building that wealth until you own that first piece. Absolutely. Once you own, and you have now gained some equity because of what the housing market is doing right now. Housing market is going crazy and values are continuing to increase. You will have some equity. You can pull some of that equity out. And here in the state of Texas, up to 80%. Yep. So once you've crossed that 80% loan to value, so the current value versus the amount that you owe, if it's less than 80%, that gap in between what you owe and 80% is the amount that's your cash.
Yeah.
Come to a good banker like myself, and I can help you access that cash.
And speaking to that, so we have interest rates, right, that we have to consider, but then we have the market rate of what's happening with the appraised values of our home. Those values are continuing to go up. The
Correct.
interest rates are fluctuating. Home values are constantly going up. So if you're on the fence about, should I jump in and purchase a house now? It's always a buyer's market. Yes, it is. And no pun on. But it really is always a buyer's market, truly, because if you can afford the home and you are ready, it's a buyer's market. So don't worry about what's going on with the interest rates, what's going on with the housing, what's going on. You need to get in there so that you can start building wealth right now.
So I do want to elaborate a little bit because the term hard money was used several times and people may not be familiar with that. So there's traditional, mortgages and lending. Then there's non-traditional mortgage and lending. Hard money is a term that addresses that. Usually it's short term, like you guys said. The interest rates are higher because it's riskier.
Significantly higher.
The security is the real estate and it's usually for quick funding.
Right.
And so investors look at that if they're flipping properties or they're rehabbing properties, or it's a bridge loan, meaning that's a temporary loan. So I just want to make sure that you understand that the term hard money is what most investors probably look at if they're okay to, have those features.
Yeah.
It's a fix and flip.
Yeah. Very good. So she had a question here. Are they sharks?
Yeah, they
Are they sharks? Are they loan sharks? So listen, my point to that is no one can beat you out of your money but you. You got to read the contract. We don't read, right? So if you read the contract, you read what the stipulations are, then there's no way that they can get you out of your money because you already know what the plan is. So they can be loan sharks to people who are not reading, right?
Exactly.
But we are educated and empowered, so we will read through every contract that we get, right?
Yes.
Question.
Yeah, I think the lady that read what Kamala Harris had said that she will build, I think, 3 million homes by the end of her first term, and I'll get them trying to make the mortgage rates go down or the investors make houses cheaper.
Yeah.
What do you know about that? Is that realistic or is that just hyperbole? Because I don't know how anyone in America can make homes go down other than the Fed.
So that was a long question. So his question was the promise from Vice President Harris to build 3 million homes by the end of her term. Is that realistic? And I honestly don't think that any of us are qualified to answer that. Well,
What I will say, I highly implore everyone to be knowledgeable of what's going on locally,
Right.
because a lot of federal funding does come to our local municipalities. Most of our municipalities, especially here in the city of Dallas and surrounding areas, they understand affordable housing is top priority. We
It
work
is.
very closely with them trying to find solutions. And most of them understand that we have to build. I implore you guys, especially here in Dallas, to look at the Dallas Housing Coalition.
Yes.
They're advocating for housing in Dallas to close that gap. And really what the crux of that is we need to build more homes, right? Because there is a gap. You build more homes, get more people in housing, and then of course that's going to level out when it comes to affordability. So I implore, not necessarily speaking to the national politics of it all, but look at what's going on locally, because that is a priority for all of our local municipalities, how to close that housing gap through building more homes. But there are organizations here advocating on behalf of all citizens. So definitely.
Are they speaking about putting money out there for builders to build?
So there are several different initiatives here. Again, locally, there's some developers of color for cohorts that are going on. There is city funding specifically for certain developers that are building in certain census tracts. For building, for developers, there's some city funding there, some backing for that. But again, that's kind of where my department comes in, community investment, right? Looking at what those local needs are. How can we also attribute to some of that funding in the community investing in order to sustain and help. There's opportunity zones in Dallas as well, right, that have historically been disenfranchised, to where investing in affordable housing solutions, incentivizing builders to build affordable housing, right? So there's a lot going on locally. I think we just all need to be in tune. Those opportunity funds. Yeah. But there are some things that are happening. There was a bond that was recently passed as well. I'm not sure if you're familiar with that. And certain dollars were allocated towards homeless prevention as well as housing. So I just highly implore in Dallas. And there are several organizations, banks, and different private sector coming together to try to help with some of that.
Okay.
So there's Dallas Housing Coalition. I mentioned that. I mentioned the opportunity zones. That's going to be through the Dallas County and City of Dallas. Yeah,
It's on their
It's in the
on their website. If you,
City of Dallas website.
website.
The program.
I'm sorry, I didn't hear you.
the HUD dollars.
From HUD. Okay. Yep, that is correct.
So where did California coming in? Are we going to demolish their policies and stick to our own?
That's a different conversation.
So that
Home prices, everything just going up. This is Texas, so when the investors in California gonna take it back to California?
so that is a whole nother
Conversation.
seminar. That's a whole nother seminar. Yes. It's relevant.
It is.
It's relevant. It is relevant.
The beautiful thing.
So her question was, hold on one second, Miss Tina. Her question was, what are we going to do about California and their policies? Are we going to send them back to California? Or are we going to leave that here? So basically, she's talking about how Californians have moved here, prices have increased, population has increased, infrastructure has had to change because we can't accommodate the amount of people that are coming in at the pace that they're coming in. So she's asking, what are we going to do about that? And I told her that's a whole nother seminar.
Because I was going to ask that. I know that, because you were saying that it's a great time to buy, but then I saw where they need more places to put these people.
Yeah.
So that's what I'm saying. Like, I've been seeing these little box houses popping up in South Dallas. Is that them California people?
Well, them California people, So listen, the inventory has been low, and it still is historically low across the nation. So when we talk about building homes, when we talk about all of that, we know that inventory is low. But there still are opportunities out there. And so when we think about opportunities, that may not be your dream home, right? It may not be your forever home, right?
Right.
It may be that box home. But guess what? That box home is yours and you are building equity on that home. So we have to get out of the mindset of thinking that the home that we need to go in is going to be our home forever, because that's just not true. Most people, when they move in, you look at 5 to 7 years and then you're moving again because life happens, right? You either need to grow or you need to shrink, right? So we really need to get in the mindset of let's get into wherever we can get in and move forward. Yes, ma'am.
And that's one of in the initial conversation that I have with buyers. That is part of the dialogue. Understanding that as a first-time home buyer, your home is not expected to be your forever home. It is to get in and to begin building equity. And as you said, 5 to 7 years, life is going to change. Family dynamics change. Children get, larger and need more spaces. Kids grow up and they move out. You need less space. So if you spend that same 5 to 7 years renting, you've paid 100% interest and received zero equity. So even if the home was not everything you dreamed of, if you rented for that same time period, you would have nothing, absolutely nothing but the furniture you brought, that 7-year-old furniture that you brought with you, right? Where if you have a home to sell at the end of the 5 to 7 years, all that equity that has acquired in that time frame, from the time that you purchased and as prices continue to go up, who do you think gets that equity? The landlord, the owner. So if you're the owner, that's now your equity. Then you take your equity and you move to the next best home for you.
Yes.
Don't your equity if you do short sale?
Yes. Yes. Yes.
That's always been standard to do short sale. You do your equity.
You do, but
Okay, let me just repeat her question. That's okay. I got to remember to repeat the question so that our guest online can hear. So her question was, do we lose the equity when we do a short sale?
Within that period of 5 to 7 years,
Within the period of 5 to 7 years, I think just period. If you do a short sale period.
If it's a short sale, if they haven't sold over what you owe, yes, you're going to lose the equity. Because the bank wants to make sure that they get paid what you owe them. But I want to speak to, how long have you been doing this series?
Since 2000. Yeah.
Since 2011. I want to speak to you about when you said about the Californians moving and the prices going up. Do you guys know that if you had purchased a home when he first started doing this class in 2011, if you had that home right now, do you know how much equity you would have?
Yes.
So that's why
a great question.
No matter what type of home it was, I wanted to bring that up because I know what I paid for my home and I know what it's worth now, and I'm just might retire. But seriously. But think about it, if you guys take this knowledge that they're imparting on you now, start now. Don't look at what the price of the home is, because they're going to keep going up, because guess what? They're not making any more land.
There you go.
Right?
There you go.
So just think about those people that were in this class in 2011, where they are right now, if they took that knowledge and purchased a home.
So even more than that, the people that are sitting here today getting this information, we're going to hold you guys accountable to share the information, because that's how the word gets out.
Absolutely.
When we know better, we do better. Yes, sir.
What I would like you to do, just to make sure that we can get through the home buying process.
Yes.
And still answer questions. Complete that, because that's going to provide people online here some valuable information. And then we'll open up for more questions afterwards.
Sounds good. He's getting us back on track here.
Okay. As he does.
So, excuse me, the next step in the process is going to be to get the buyer paperwork signed. And I just want to just put a little plug in here that the National Association of Realtors has just laid down a new ruling where we have to have a buyer rep agreement or buyer representation agreement signed with the buyer in order for us to view homes. Okay. So in the state of Texas, it's been like that since maybe 1997. But this ruling is now a national ruling. So when we say buyer paperwork, that's what we mean. We mean the buyer representation agreement that has to be signed before we can even get in the car and get into a house. The second part of that ruling is that now there is an opportunity for the seller not to pay the other side, not to pay the buyer agent commission. Okay. So what that means is, and we won't get into this because it's something that you really need to talk with your realtor about one-on-one, to talk about strategies and what that might look like for you. Because as a first-time home buyer, you may not have the funds to pay your agent their professional fee. Does that make sense? But I just want to make you guys aware of that, because if you are talking with an agent and they don't bring it up, you are now educated and empowered to say, don't I need to sign some paperwork? Right? And then how are we going to handle paying for your professional fee? Okay. And that's a big deal. That's a big thing to discuss, because if you as a first-time home buyer, you can't afford to pay your buyer's agent, then we need to come up with some strategies on what that might look like. Okay. So signing the paperwork, then we go into viewing properties, and that viewing the properties are going to be based on the criteria that we've talked about at the very beginning. Now, we do understand that as you start looking at homes, you may realize that your criteria shifts. Okay. Be honest with your realtor. Be honest. If you hate the house, say you hate the house.
Say it after you've walked out.
Say it after
not in the home.
Thank you. And that's a great point.
Right.
Great point. And the reason why she's mentioning that is because with technology, now we have recording devices, we have cameras.
Absolutely.
There's a lot to consider. So think about that, but be honest with your realtor. If there is something that you don't like about the home, once we get in the car or we get to the office or the coffee shop, then you can tell me exactly how you feel about it. Okay. But let's not look at 1,000 homes only for you to say, no, this one is not it. Well, what about the home don't you like? Okay, so we can avoid looking at 1,000 homes. I told y'all we don't look at homes for hobbies. Okay, so the next thing is, once we have reviewed the properties, you find something that you like, your realtor is going to do a comparative analysis to basically see if that home is priced where it needs to be priced. And then we will consider making an offer, and we'll think about the price. We'll think about the terms of the offer. There are several things that we can look at that can be negotiated. Who's going to pay for the title policy? Okay. Is that going to be the buyer or the seller? Is there a survey? Because if you're getting a loan, you're going to need a survey. Okay. Who's going to pay for that? Is that the buyer or the seller? Right? Are you guys tracking? You're following? So there are many things within the contract that we can talk about as far as coming up with the terms of the offer. And a title policy could typically be 1% of whatever the sales price is. So that's money out of your pocket if we haven't negotiated for the seller to pay that. Okay. So it's going to be real important that we have candid and honest conversations all throughout the process. Once we have agreed on the terms, then we submit the offer. The offer then goes to the other agent, okay, the seller's agent, and then we negotiate. We get into the point of we are negotiating. We're talking about who's paying for what, who's doing what, and what is this going to look like. Once we have negotiated the terms, we agree, we're moving forward, we go into what's called the option period or a due diligence period. Okay. That is your opportunity to do an inspection on the home. I'm going to highly recommend that while you're doing your inspection, that you also look at insurance, right? You figure out how much the insurance is going to be.
Absolutely.
Because you can that insurance can take your debt to income ratio out, and then you cannot qualify for the home. Angela alluded to that earlier. So, excuse me, once we are in the option period, part of what happens during that period, in addition to your inspections, checking on insurance, title comes into play. Okay. So one of the things that we're going to consider once we've made an offer, the offer has been accepted, there are two things that you're going to consider up front. That is your earnest money. Okay. And that is a deposit. And then there is a option fee. And that option fee is your unrestricted right to terminate the contract. So if you get in that period, which is normally 5 to 7 days, if it's a larger home, then maybe longer, depending on what all we need to inspect. If you decide that, you know what, I don't really like this home, or if some repair comes up that is just astronomical and you don't want to make that payment, or you don't want the issue, it's a plumbing issue, it's an older home that you may end up having to deal with plumbing issues, you can terminate that contract and get your earnest money back. Okay, so I want to take this time and share, or allow Title Tina to share exactly what her company and a title company will do to actually help in this whole process, because they are the neutral party to all of this.
Yeah, we are totally neutral. All we do is facilitate the transfer of ownership of the property. So this is what the easiest way for me to explain it. While the bank is underwriting you, we are underwriting the property. So we actually send things to the underwriters for them to review, such as if there are any liens, judgments, if the person that is actually selling you the house is the person that actually owns the house, so they can sell it. The most common issue that comes up is that a lot of times we have people that are deceased people that are on title. Mm-hmm. That is a very, very common thing. So before you can take ownership of the property, we clear all those items out so you have a clear title to the property, if that makes sense. The beautiful thing about title insurance is that you pay it one time. That's it. And it stays with the house with you as long as you own the house. As soon as you sell it, that policy is, null and void. But it's a one time. Those rates are determined by the Texas Department of Insurance. So no, you can't call me and say, girl, can you give me the hookup? Can I get that? No. I don't set the rates for the title insurance. Okay. So what I like to think about is that we know we pay car insurance for things that can happen in the future. Title insurance cover things that happen in the past. Okay. So that means that if Shar sells a house and Shar's daddy was a Rolling Stone, and she's got a sister that comes up and says, that was my daddy's house. You can file on your title policy.
Why is she telling my business?
That's what we do. And we're totally impartial. We get blamed for everything.
Yeah.
Usually. But we really don't have anything to do with it other than making sure that you get a piece of property that is yours free and clear. That's it.
So thank you, Title Tina. Another thing that is critically important is making sure that we are with a reputable title company so that the insurance is in place when you need it, right? That's going to be extremely important to make sure that we're working with title companies that will actually do the due diligence, do what's required, and then that they'll be around when you need that policy. Mm-hmm. You have a question?
So title insurance is different from homeowner insurance. There's two different.
Yes.
Great question. So her question was, title insurance is different from homeowners insurance. And that is absolutely true. Do you want to talk a little bit
Yes.
about that?
They're different. They both cover the home, but your homeowner's insurance covers things like your roof, flood, things like that. Title insurance covers history. That's what I like to call it, because it covers if there are somebody that had like a judgment filed on the property that we missed. And I've seen this, no, we didn't miss it. But we've closed. Now I'm going on record. We did not miss it. We did not miss it. But we've had properties that have been sold, and there's been a child support lien that was 15 years old. And then they're like, well, that can't be accurate. We bought the house and this didn't come up, or we sold the house. Well, title missed it. Okay. Because what happens is that when we get the contract, we send it up to our title plant. They pull history not only on the property, but they pull up all the history on the sellers as well. So if that seller has a judgment or anything like that, child support liens, things that could come back and hinder that title, we're gonna know about it. And we, believe it or not, you guys, we even get obituaries when we have people that pass away. I have to get copies of their obituary.
Yeah.
And I get all their relatives, the siblings that are listed, because I cannot tell you how many times I have people that call me and say, well, I'm the last living relative. Are you, sir? And then I'll sit there and start talking to them. And then they'll drop and say, well, my cousin, whoa. I thought you were the last living relative.
Yes.
If you got a cousin, that means that grandma had some other kids and grandkids. You can't sell this house without getting the okay from your siblings. Everybody's entitled to a piece. A lot of times people don't understand that in Texas, that's what happens.
Yeah.
When you pass away, like in my case, my husband passed away. Well, his half is divided between our sons. That's the way it goes.
Right.
Unless you do a will.
Right.
Wouldn't that put you in a position to get like a child support as his wife?
I beg your pardon?
Wouldn't that put you in a position to get like a child support as his wife?
Or child support. If it's a minor. Only if it's a minor, but no.
So her question was, wouldn't that scenario put her in a position to get the child's part? And if it's a minor, no. And not here in the state of Texas. So that's why it's critically important to make sure that you have title insurance, because that's going to save the property owner for the duration of their ownership of the home. And so we want to kind of keep this high level. We're digging a little bit into the weeds, and it's okay because we want you guys to have a good understanding of it, but we don't want to get so far into the weeds to where we lose track of where we're going. Okay. Did you have a question?
You guys were speaking of the elevation of anything. I don't know who regulates the home.
The Texas Department of Insurance. Yep, that's a good question. Her question was, who regulates the homeowners insurance? And that is the Texas Department of Insurance. So back to our process here. So we have gone through the option period, or we're still in the option period. Title has done their process. Now we've gotten the inspection report back, and now we're going to review that inspection report to make sure that you guys are comfortable with what's on it. If there's something on the inspection report that you don't feel comfortable with, or it's something that you want to negotiate, this is our opportunity to negotiate the repairs with the seller. Okay. Once we have gotten through that process, then we go out of the option period. And at that point, the appraisal is ordered by independent financial. Okay. And I typically would not encourage the appraisal to be ordered until we're out of option, because that appraisal fee, that's the third thing that you're going to have to worry about. So let me go back. It's the fourth thing. It's the earnest money, which is typically 1% of the sales price. It is your option fee, and that's negotiable. It could be $100. It could be $500. If we're trying to win a sale, if there's multiple offers, we may go a little bit higher. The next thing is your inspection. You're going to pay for an inspection. And that inspection typically will run anywhere from $500 to $800 or more, depending on the size of the home. Okay. That inspection fee is non-refundable. Okay. The appraisal is non-refundable.
That's not.
So those two items are non-refundable, but it's worth it to make sure that you understand what you're buying and you have a good understanding of if there's going to be an issue there, right? So my recommendation is that you don't order the appraisal until after you've gotten through option. And I will typically call the my lender, Angela, and just say, hey, Angela, we are out of option. Can you go ahead and have the appraisal ordered? And she'll get that ordered. And then you guys would pay for the appraisal. That will happen. Depending on when we're closing, the appraisal can happen within a couple of weeks or it can be later. They're prioritized based on the close date. Okay? The appraisal fee is basically, so wait, say the question again. What is the appraisal fee based on? Square footage. So appraisal fee is typically based on square footage and also the area, because I've seen different areas where the appraisal fee will be a little bit more.
Absolutely. Can I add to that? So the appraisal fee is set by the appraiser. And in a highly populated area where an appraisal is easier for an appraiser to get comparables, it may not cost as much as, say, for instance, if there's an odd house that he needs to dig, he or she needs to dig a little further to find comparables to come up with an accurate value. That will cost you, I think it's called a unique property fee. An appraisal can run any place from $600 to, I've seen them as much as $950. So it's square footage and area. And rush. So if it's a rush, there's an additional fee on top of the appraisal.
That's very good. An appraisal is an opinion of value. Okay, so you have your appraised value, and then you have your appraisal value, your assessed value, which is by the county. And then your appraised value, which is by an appraiser. Okay, once we get through that, title process is still working. We've negotiated repairs. Now we're getting really close to closing. So we're going to do a final walkthrough of the home right before we get to closing. So that final walkthrough can happen the morning of closing. It can happen the day before closing. But the purpose of that walkthrough is to make sure that that home is in the condition that it should be when you purchase it. So when you did your first walkthrough, you did your first inspection and all of that, that home should be in the same condition or better, because if there's repairs that have been added, then that's going to be taken into consideration as well. Things to kind of look at. I've seen situations where we walk into a home, a washer and dryer has been removed, but they forgot to turn the water off.
Oh.
So the hose is leaking into the laundry room. So that's a problem. You don't want to buy that house with that water intrusion. So at that point, we would halt closing and make sure that that's taken care of before there's a purchase. So it's things like that that can happen. There could be vandalism. There can be break-ins if the home is vacant. So we just want to do a walkthrough to make sure that everything is in place. We've done the walkthrough. All the documents have been assembled. Title company has worked with bank or mortgage company to assemble all of the documentation that you'll actually sign at the closing table. Once you guys have signed everything, the proceeds will go to the seller. They're going to come directly from the bank. And basically it'll be sitting there at the title company for the title company to disperse funds accordingly. Okay. And then once the funds have been approved and authorized by the bank, then you guys have access to your keys and we say, welcome home. Okay. So that's a real high level overview of the process. Do you guys have any questions before we get into the next session? Are you about to leave? You can leave. Okay. The next section is the best section. This is where Miss Angela and Lachey is going to talk to us about the different programs. So you can leave. That's the best part.
Well, I guess
Free money.
and I'll ask my question.
Sure.
Because of the astronomical cost of the houses these days, I mean, I don't know of anyone lower than 250,000. When you're partnering with someone to buy a home, and I don't know if they want to talk, if you bought a house with your daughter or two sisters buying a house together because of not having the income for a $400,000 house, what are the pitfalls or what is some things that you may not know might come up if you're buying a house jointly with someone?
Great question. Great question.
Can Angela answer that?
Yes.
Different option.
Yes.
So we can cover that as when you
Okay.
Okay. All right. So I'm going to repeat the question. He is so bossy. Just tell me what to do. So the question was, if she wanted to purchase a home with her sister, her daughter, jointly, what are some pitfalls or what are some things that could come up that she's not thinking about? And Angela will talk about that.
I'll answer that as I go through programs.
In the next step. Okay. Does that make sense? All right. So let's transition into the next part of this. Are you guys good? We good? Everybody good? Everybody online good?
15 more minutes.
15 more minutes. Okay. So we are going to get through this next part. I want you guys, if you have any questions, please ask the questions. And if we don't get to your questions tonight, what we will commit to do is we will get those questions and send out more information to you guys, and we'll stay connected as well. So Angela and Lachey, let me get your slide up so that we can.
Okay. And I'm going to scoot over here and get my water.
Yes.
I'll move closer to him.
So if you guys want to grab some water, we have about 15 more minutes. Thank you guys so much. The questions have been great and right on point. So we appreciate you guys for participating and engaging in this entire process. And we hope that you walk away empowered.
Right. Okay.
I'm good.
This is a clicker too.
Okay. Can I put this here?
Yeah.
Well, I'm going to go through a few slides and talk about special programs. This is Independent Financial. This is our headquarters in McKinney, Texas. And before I go through the slides, because there's a special program, I don't know where I'm supposed to be looking. There is a special program that I want to really get into the meat of. But first of all, as a residential mortgage lender, I do all loans. I offer all of the different programs and products that are available traditional, and that would be your FHA mortgage, which is a government-backed mortgage. I touched on that a little bit in the beginning. That requires a 3.5% down payment. It's backed by the government. There is no income restriction or anything like that. An FHA loan will be a little bit more strict on the property. So what it will do is it does require you as a buyer to look more closely at the property. There are additional inspections that are done with FHA. There is a conventional mortgage. You may have heard the term of Fannie Mae or Freddie Mac. Those are the backing, the entities that actually purchase these mortgages on the back end. They, for the most part, set the criteria for how you will qualify for the mortgage. That loan is going to, as a first-time home buyer, you may have opportunity to make a 3% down payment. Typically, minimum is 5%. That loan does come with PMI. I touched on that a little bit in the beginning. That's the private mortgage insurance. Private mortgage insurance is the additional insurance that covers the bank because it's a little bit more risk when you have what we call less skin in the game, right? We offer VA mortgages. So for our veterans, first, thank you for your service. The veteran, that's another government-backed government-backed mortgage that will allow you to purchase. It's a 0 down payment loan. They have special criteria and qualifying because you've served the country, right? So we've got FHA, we've got VA. There is a USDA loan. That's so if you're purchasing out in the rural areas, a primary residence, it's another government-backed loan that will allow you to purchase land, not in metropolitan areas, but if it's on acreage and it's a little further out, there's special financing that's available, backed by the government. They have even programs that you don't come directly to a lender. If you have very low income, they will underwrite that loan directly. So it may be a smaller, so those little container homes that you said that may sit on, 2 or 3 acres, and you make just a little bit of money, that is a USDA loan all day long. And I have assisted clients in the past with purchasing those, even though we don't, as the bank, finance them. But lastly, we offer our community path mortgage, and that is the star of my show that I wanted to. I'll tap it. Our community path mortgage. So all of the mortgages that I've spoken of up until now have been backed by other entities, FHA and VA and USDA and Fannie Mae and Freddie Mac. This is near and dear to our heart. It is what's called a portfolio loan. So it's a residential mortgage that Independent Financial wrote the guidelines for. We keep that mortgage. We don't sell it to anyone. It is always with us. You can come in and make your payments with us or pay them online. And if you have questions, even though I am on the front end, you can always reach out to your lender to ask questions about what's going on with your taxes and whatnot, and we can connect you with the right persons. But a community path mortgage, it's 100% financing available. This is one of the tools that we use to help remove some of the barriers to home ownership. So how do I save 3%, 5%, 20% down payment? With this mortgage, you don't have to. And it's not necessarily limited to a first-time home buyer. So how do you get such a mortgage? Some of the highlights of the program: it is a purchase or refinance product. Haven't had opportunity because rates are not really conducive if you already own a home yet to refinance into a community mortgage, but that is an opportunity. But we will lend 100% of the purchase price up to 100%. And then on the back end, you can have 105%. So I'd spoken a little bit about down payment assistance programs, and if we could layer that, the program that the vice president is talking about implementing, or any other program, you may end up borrowing 105% of the actual purchase price and finance that. So it's not on your first mortgage, but if you have a first mortgage, and if you get a lot of down payment, we'll back down the amount that you need to repay. Mm-hmm. So the amount that you repay may be less than 100%, but then you have maybe the $25,000 from the federal government. Maybe the city or municipality that you're moving to may offer down payment assistance. You may get qualified for that. When we stack all those together, it's paying all your closing costs and the purchase price, so up to 105%. It's pretty good, huh? 30-year fixed rate. So once we set the rate and you close, that rate does not fluctuate. Your payments don't fluctuate and change because of the interest rate. Now, on another note, taxes and insurance can fluctuate from year to year. That will have a change in your payment. But the principal and interest, the amount that you pay the bank, that part never changes. It is for primary residents only. It can be used for a single family or 1 to 4 family if it is a primary, if you live in at least one unit. Gift funds are allowed. And then seller contributions. We didn't touch any on seller contributions, but the closing costs, all of the fees that are paid typically are going to be anywhere from 3.5% to maybe 4.5%, 5% of the purchase price in fees. The seller can contribute up to 6%, which pays all of your closing costs. So that's an option that when you are working with a great realtor, they're going to negotiate and see, like she mentioned at first, who's going to pay for the title insurance? Who's going to pay for the survey? That's where your seller's contributions come in. And that turns out to be a percentage. Questions yet? Not yet. So what is the criteria? If you must have at least a 620 credit score or no credit score. If you don't have a credit score at all, we can look at alternative credits. Are you paying rent? You can purchase a home because you've paid rent. We're going to look at alternative things such as maybe credit cards, maybe, let's say, your utility bills. So we need 3 things that you are paying. We do need to show that you have a pay history, that you pay things on time, even if they don't appear on the credit bureau and give you that credit score. This loan is good for up to $500,000. So we talked about if you qualify, when we come up with your maximum payment amount, the maximum loan amount is $500,000. Now, that's pretty good. Wouldn't you say 100% of $500,000, you have zero down payment out of pocket? One of the criteria that you'll have to have is once we do the verifying of the assets, we look through all your bank statements, your retirement statements, and any funds that you need to close. After closing, we need you to have at least 2 months payment left over. And we call that the PITI. That is the principal, the interest, the tax, and the insurance. As reserves. And that's because we never want to spend your absolute last dollar to get you into a home. That's not sustainable. That's not a very empowering position to be in. If we get you into a home, you have no money. It happens, but we like on this program to have a 2-month PITA reserve. Now, I talked about private mortgage insurance or PMI. This particular loan does not require private mortgage insurance. Again, I'll say no private mortgage insurance. You have zero down. There's no PMI. So there's no insurance company backing that you're making your payment. As I'd spoken of briefly, that it's a little bit more risky. That's why it's a manual underwrite. So we are going through and I am fine-tooth combing all of your documents to make sure that we can get you into the home sustainably. But because of that, we don't have to have the mortgage insurance because we know we make good loans. Question?
Conventional or eviction?
This is only on our product, the Community Path Mortgage. It is deemed as a conventional loan. So your contracts, when you get your pre-approval letter and you go to write a contract to a seller, they see a conventional approval. So there's no waffling with the seller, but it's only our product. So the question was, is it on FHA or conventional? And our product is a conventional product. You had a question?
For the first one, it says minimum credit score of 620 or no score with alternative
Trade lines.
I think that one, or no debt. What about clients who have no debt, but they're working on their credit score?
So you have to, so either if the credit bureaus report a score, we will pull all 3 bureaus. We need to pull at least 2 need to have a score in order to count the score. We pull TransUnion, Equifax, and Experian. The lowest score, if there are 2, or the middle score must be at least a 620. Or if you don't have enough credit yet to report a score, you have a 0 score. In the case that having a 0 score, we use alternative credit. That means that we're going to verify that you're paying someone on time.
But if you're out of debt, you paid your debt?
So
You're paying rent on a regular basis, but you paid off all your
you're paying rent. That's one thing. Do you have car insurance?
Yeah, but I don't. They're not reporting that. Is that going to my credit?
It's not going to the credit. It does not appear. It's alternative. So we go and verify it. You give me the information and we verify it. So yes, that does come up, and that's a good question. So the question was, what if you have absolutely no debt? And that's where the alternative credit comes in line, where we verify if you're paying rent. That's one. I'm going to verify 3 things. Are you paying rent? Do you pay it on time? Have you done so for 12 months? Great. Do you pay auto insurance? Have you had it at least 12 months? Do you pay it on time? That's 2. Do you have an electricity bill? You have an electricity bill? You have 3 things. That's alternative credit. You're in there. You have 0 debt. That means that when we talk about, when I get down to my next item, which is your debt to income ratio of 43%. Now, earlier, I mentioned that we like to keep the housing payment at about 35% or less.
It's a slim.
I don't know what happened. So we like to keep the housing debt at 35% or less with your maximum total debt ratio. So all the other things cannot be more than 43% if you have a credit score of 620 or no score. Or if your middle score is a 660 or above, we can go all the way to 45%. We're still not going to spend all of the money. We're still looking at only the gross income, and we have that conversation. Are you comfortable with this payment? But that's where your debt ratios come into play, where we talked about the taxes, insurance, and, you know, what makes up your payment, 35%. But we can go all the way to 43 if you have no other debt. If you are comfortable with that, and we've had the conversation about, you know, the kids are not in private school and I don't see that payment, so we can go all the way to 660 with a, we can go all the way to 45% with a 660. And then because education is so important, it is so important. So a home buyer education certificate is required. You must complete a certified course by a HUD certified home buyer education. And I can provide that. I can either direct you to an in-person or an online course, but it's required that you provide a certificate. Any questions? So let me back up one. Can I go back? Oh, no. No. Oh,
go maybe back. Space.
I may need some help. Not the tech person.
Oh, okay, good.
Okay. So, a little bit about this program. So it is particularly for not necessarily first-time home buyers, but if you are purchasing in, I'll say DFW because that's where we are now, but in the counties in which Independent Financial serves, and you're purchasing in a census tract, and the census tract is deemed to be low or moderate income. So the census tract is how the government does the census every so many years. How many years? Every 10 or so years. And they take a census of what the income level is for it's like puzzle pieces of neighborhoods. What is the average income as it compares to what is the income in this census tract as it compares to the overall area? So if your income for the census tract is 80% of what's deemed to be average, so area median income is 80% of the average, then this product would work. There's no income limits.
Angela, can you, because sometimes when we put that number on it, it gives that reality to individuals. Can you talk about what that area median income is for Dallas and what that correlates to when we talk about 80% upperly?
So the area median income for Dallas right now, as of 2024, is about, and I don't have the exact number because I don't have my cheat notes, but it's about $110,000 is the average median income. So 80% of that would put you somewhere in about the $88,000 range is considered.
For individual or family of 3, 4?
So the census tract is looking at the household income under that amount. For qualifying for mortgage purposes, I'm looking at application income. That means that if you've got college students that are working and they're not on the application, I don't verify the income. If you've got grandma living in the house and she receives a Social Security check, but she's not on the loan, that doesn't count. But if the area is deemed to be a low or moderate, it falls at or below that 80% mark, at or below for that puzzle piece of the neighborhood, at or below $88,000 per household, you may use this loan no matter what your income is. Up to $500,000. Does that make sense?
So when you say select neighborhoods, you also mentioned it pretty much encompasses the
So it is the counties in which independent financial sits.
Our assessment.
It's the assessment area, and I'll let Larshay speak on that a little bit.
Yeah, so our assessment area for North Texas does encompass DFW. So we cover all the way up to Grayson County, Tarrant County, out towards Hood County. But for the sake of this particular program, it can be done in all of our assessment areas. But there are some special programs specifically for Dallas County that she'll talk a little bit about. But just as Angela mentioned, the biggest thing is we can qualify two ways to get an individual in that house, right? Geography, if they're in our assessment area, or income. And so that's where, again, those conversations can be had with Angela. You can give us the address, we can look it up and see, hey, this is going to qualify based on this census tract. If that particular applicant maybe exceeds the income or that household exceeds that income of that 80%.
So I'm sorry, go ahead.
So one of the things I want, here's the takeaway from this, right? Because I'm holding back my excitement because because here's what's going on. If your reason for not buying a home is because you didn't have money for down payment, solutions solved.
Right. Yep.
Solved. The action that must be taken after this is scheduling a time to talk to Angela so that you can really see how this fits or what does fit that allows you to get into a home. So we talk about providing you with connections to help you take that next step to achieve your goal. There's underutilized resources. This resource is underutilized. Not enough people know about it. Not enough people are meeting with them. Not enough people are applying for it. And now you know. So I'm just so excited about it.
Thank you for that.
Yeah.
So definitely, this is not the end. This is the beginning. Whenever we end this, it's important that everybody gets connected and really see, based on the home that you're looking at, is it in the certain area? And if it's not, you can still make a connection and find a way to get into your home.
There are other
programs. There is an illusion of lack.
Right.
Yep.
Absolutely. Thank you for that. Thank you, Clifton, for that. So yes, so this product will fit many. It doesn't fit everyone. That's why I began this by saying that I offer all loans. I do jumbo loans up to $3 million. That definitely doesn't fit within the community path wheelhouse. However, there's always a way to help you get into the home. One of the special features, as Clifton and Larshay both touched on, is specifically for Dallas County. We are targeting our focus in specifically Dallas County to help remove barriers. Some of the barriers may be a few credit challenges. It may be your debt to income ratio. In Dallas County, we are offering this same program, everything that I'd said before, but I'm going to lower that threshold for credit score to 580 as opposed to 620. So again, we'll pull all three bureaus. We need to pull at least two for the score to count. We'll take the middle or the lowest score if we have two. It must be at least a 580. Max loan amount is still $500,000. In Dallas County only, I'm going to remove the reserve requirement. So what that means is where I was requiring to show liquidatable funds of 2 times your mortgage payment left over after you get into the house for Dallas County, because we are diligently working to help remove those barriers, specifically because it's such an issue in Dallas County that we're going to remove that the requirement for the reserves. And then I'm going to increase your debt to income ratio maximum 50%. Now, not everyone needs to go to 50%, but that means that that's going to provide you a little bit more access to homes. If there are things that I need to count, like student loans, student loans can be an issue. Even if you're not paying them, there's a payment that's associated with that. And sometimes that may drive your debt to income ratio. Of course, home buyer education is still required, and there is no PMI. And I know I kind of breezed through that really quickly, but I wanted to get the information out there, make sure that you know what's available, all of the products and programs to remove barriers. And I believe that's it. So we've asked, does anyone have any questions of what's been covered specifically on the Community Path program?
Is that very similar to the NACA program?
I have heard of NACA. I am not as sure how it relates to NACA. I think that there are a down payment assistance program.
I would say no. Short answer is no.
Yeah.
So her question was, is it similar to NACA?
Short answer is no.
And Clifton's answer is no. I'm not as familiar. Okay.
What is the income, you didn't really talk about the income requirements for the community path mortgage loan.
So there is no income limit on the family purchasing if the census tract is deemed at an 80% area median income, if either low or is 80% or less, or another way that you can qualify their neighborhood is if the census tract is majority minority. So that opens up a whole world of, it could be nearly anywhere. And we don't say specifically which minority, but if it is 50.01% of a minority, the home qualifies. Therefore, there is no limit on the income. So there's no limit on the income that the applicant. There is no.
The money that where you have to see this amount of income come in that they can afford the house.
So it's governed by your debt ratio. So depending on the mortgage payment and your other debt, if you tell me that, I want a $500,000 house, I can calculate what that payment would be, look at your other debt, and say with a housing payment of this and your existing debt, your income needs to be at least X amount. But there is no minimum to get into the product. I qualify you for the amount, and then I leave it up to your great realtor to go out and find the house that fits within the amount for which you qualify. Does that make sense?
But remember, going back to that rule of thumb, right? 30 to 35% of your income, that's how we calculate how much home you can afford. So that's kind of the rule of thumb. Same if you were renting, right? That's what landlords look like.
Landlords are looking for three times. Yeah. So I'd say 30 to 35% on your mortgage, but we have to take into account some may not qualify for 30 to 35% of their income, and that's because they have a lot of other debt.
Yep.
I haven't heard y'all say anything about tax returns. I thought you usually had to show tax returns. Y'all show pay stubs. I thought y'all said more about pay stubs today as opposed to tax returns.
So yes, tax returns, as we get further in, yes, tax returns are required especially if your income is, if you have self-employment. If you're filing Schedule C or Schedule S, that's the only way that I can determine your income. And the question was if tax returns are needed. Yes, we will need them, but if you are a W-2 employee only, I don't need them to qualify you. Will you need them for the underwriter? Absolutely. But they won't have an impact unless the income is coming from self-employment. Okay.
So if we look at the home buying process that Charmaine went through, you talk to the real estate agent, you kind of get an idea of what your goals are, what you're looking for, but then meeting with the mortgage person to determine what you will qualify for. That's a good first step, because you might be looking at homes that are $350,000, but you can only qualify for a loan for $250,000. And then the next step, because financial advisor will be really good to see what can you really afford. So you may qualify for $250,000, but can your cash flow afford a $250,000 mortgage? It might be $200,000. And I think it's a matter of, setting realistic expectations. And we had talked about before, buying a home now and having your equity grow, even if it's not your ideal home, is a good financial move if you're prepared to buy a home now, as opposed to waiting, because the cost for homes typically will not go down. Inflation and supply and demand is going to be more expensive later. And so this is a great tool, a great solution. If you're financially ready to get into a home, you're making your payments on time, you're able to save money, but you just don't have that down payment to get down, solution solved.
Solution solved.
I want to show you guys, am I on? Sorry. I want to show you guys a home just to kind of give you an idea, if I can pull it up, to give you an idea, because I think there's a misnomer about, is this going to be in an area of a neighborhood that I don't want to live in? And that's not necessarily the case. So I want to show you a listing that is in the city of Richardson. And I just dropped the price on this home.
I think it crosses.
And it literally fits into this program. Okay. It's in the city of Richardson. And let me see if I can bring up this. Maybe. Maybe not. Let's see. There we go. I had to move it around. Okay, so this home is in the city of Richardson. It's going to make me work.
That's nice.
But I just want to take away that misnomer that this home is going to be somewhere where you don't want to live. It's not in an undesirable area. This is a beautiful home, 3-bedroom, 2-bath.
And it's not a tiny home.
It's not a box home.
Not a box.
Look, somebody's going to buy that home.
Somebody's going to buy the home.
What's the price of that?
$399,999. It's price to sell. In Richardson, in the city of Richardson. And I'm telling you guys this because I think that sometimes we think about these programs and we instantly go to, well, I don't want to live in the hood, right? Or I don't want to be in this area of any neighborhood. But I'm just here to tell you that this one fits. For under $400,000 because it's $399,999. But it's $400,000. But listen, she said something that you guys, I don't think any of you caught because everybody should have been clapping and we should have had church in here. She said no PMI.
Yeah.
No PMI. So that's going to reduce your monthly payment. So you see $400,000, but instantly there's no PMI.
Several $100s.
Which is several $100s.
In conjunction with some of that down payment assistance.
Yes. You guys get approved and make an offer on this home. Let's get you in a home.
But to your point, let's just say, though, that someone cannot qualify for a $400,000 mortgage.
Yes.
It's a $200,000 mortgage.
Mm-hmm.
The conversation still needs to be had.
Right.
You still need to look at what's out in the market for $200,000. There's something in the market for that.
Right.
Well, I would say find one because personally, I have found places that are not in the hood that are within the $200,000 range. You got to find them.
Yeah.
Right. And I'll tell you this, as a financial advisor, I work with clients who are very wealthy. They didn't start off wealthy.
Right.
They start off buying a home that was really low, that most people did not want to delay the gratification.
Yeah.
They did not want to live in that home, but they did. And they saved money. Their equity grew.
Right.
They sold that home and bought something larger.
Yeah.
So it's a matter of, are we willing to pay the price? Because getting into a home that you can afford now, even if it's not your ideal home,
Right.
will help you create wealth.
Right.
And if you want to wait until you can afford a $500,000 home, the longer you wait, the more expensive that home's going to be.
Absolutely.
So I would say make the leap.
Going back to that, I cannot tell you guys how much it can really help. We see small businesses that got their start with that business from the equity in their home because they needed that. They needed investors, couldn't get investors. They needed that capital, couldn't get it, but they tapped into that equity in that home to be able to start that business, to pay off debt, to send kids to college. There's a lot of untapped resources we don't think about with home ownership, but it can really pay it forward and change your entire life and your family's life through that home ownership process.
And think about if something happens. If you have to be without a job, tap into that equity to keep yourself afloat, right? Instead of going completely under. So there's so many different things to think about when you think about home ownership. But the thing that we have to do is act. Okay, we need to make that step to home ownership. The only way that this is going to work is you got to take action. You have the tools and the resources right here in front of you to take the action. Another thing that I want to say before I hand it back over to Clifton is having a realtor that has additional resources is going to be important too. So with my company, we offer what we call matchmaking. And what that is we have a list of homes that we share with each other before we even go on market. So if I have a client that's looking for something that's $200,000 and it's in our matchmaking website, guess what? Hey, I have a home that we can go look at right now that's not on the market. You would not be competing with anyone. So you need to be thinking about those kind of things as well. Is just having a realtor that's connected. Okay? So, Clifton, thank you so much. We've had so much fun. I hope that you guys have gotten something to walk away with, something to think about. You have resources. There's no reason why you can't even start the process. You can start the process.
Let's
Give
have
it
a
up.
conversation. Yes.
So again, this is not the end. This is the beginning. I want to say goodbye to our online audience, and then we can stay here and answer more in-depth questions. So first off, thank you so much. Thank you so much for sticking in with us.
Yes.
But stay connected. Please, please, please email me at thrive@empowerseries.com if you have more specific questions to stay connected with these beautiful professionals here that are willing to help you take that next step to achieve your goal. Email me or put a comment in the comments section and I'll get you connected. The Empower Series hopes to do 4 things with every event. We want to give you hope that whatever you imagine you can achieve. We want to inspire you to take consistent, disciplined action on your ideas. We definitely educated you here, gave you some information you didn't know, but more importantly, nothing of significance can ever be done alone. So we want to make sure that we're connecting you with the underutilized resources, individuals and companies that are there to help you. So stay connected. Thank you for joining us and staying in. Until we meet again, be empowered to thrive. Thank you for watching our Empower Series YouTube video. I really hope you enjoyed it. Remember to hit the subscribe button below, as well as the little button to be notified the next time we upload our video. Until then, stay connected with us on social media, Facebook, Twitter, Instagram, whatever your social media flavor is. Inspire the world to thrive. See you soon.